Hi, everybody. Welcome back to Ox Talks. Thanks for watching the show. As always, I appreciate you hitting the thumbs up button for me, liking these videos, sharing them with your family, friends, and loved ones, and subscribing to this growing channel if you haven't already subscribed. That's my ask, and I do really appreciate it. So the stock market continues to, from what I can tell, blow off and downplay what I believe as a casual observer, layperson, outsider, as being the United States literally being on the precipice of the next world war. I don't think for a second that the recent actions that are being taken to authorize use of longer range missiles, United States manufactured missiles into Russia is by accident. I just saw an article this afternoon from the Zero Hedge that now the UK has evidently launched what are known as Storm Shadow missiles, 12 of them deeper into Russian territory. So you have this now concerted effort, evidently, to attack Russia territory much further beyond just the Ukrainian battle zone area. And the question is, at what point is Russia going to take a serious stand and have a massive response to this? I hope not at all. I hope that calmer heads will prevail and that this transition to the new administration can take place, and maybe there will be some discussions to, let's say, de-escalate the situation. But it's definitely not going in that direction right now. This is not political. Just read the news. This is what is happening in this conflict. And we all should be very, very worried about this, okay? And I tell you this, the Dow Jones was down a couple hundred points today. It came back towards the end of the close to finish up 139 points. S&P and the NASDAQ, were down just a fraction, but they were down much more earlier today. So nothing appears to derail the cheering fans in the United States stock markets. Cryptocurrencies also in connection with the markets have been rallying. I saw Bitcoin, I believe, touched pretty darn near close to $95,000 per Bitcoin. Gold is sensing the danger. Gold was up another $20 an ounce today, something like that. So at what point will the markets start to pay attention to this? At what point will the grave consequences at stake here be taken seriously? I don't know, but you and I should be taking this seriously. You and I should be preparing our homes, our farms, our families, our friends, loved ones, to the best that we can to, let's say, be able to weather any kind of bad event that comes our way. Whether that's going to be, war on U.S. soil, whether that's going to be a grid down situation, whether that's going to be a telecommunications down situation, we just don't know. And you all might think, well, this is doom and gloom, this is panic and fear porn. I mean, take it as you will. I am amazed that this is not being received with much more, let's say, fear by the general public. I was talking to some people today, just out and about, asking them what they thought about this escalation. I would say most of these people that I talked to didn't even have a clue what was going on. So they don't even watch it. They're not paying attention. It upsets them too much. So, a whole lot of the public is not even paying attention to this. Meanwhile, the warmongers are definitely paying attention to this. So I pray that I have I have family, I have parents alive, I have kids, and I just pray that we are not going down an irreversible course. Okay, let me jump over to the economic news I want to share with you today, because we know that the middle class and the lower class continues to be wiped out, decimated by the high cost of everything, by inflation, by the pace of wages not keeping pace with everything else that's skyrocketing: property insurance, medical insurance, car insurance, food prices, all that stuff. So today, out of Target stores came out with their earnings, and they were horrible. Worst and the biggest miss on earnings in 2 years. Okay, so Target is one of the bellwethers of the health or lack thereof of the consumer in this country. Okay, we talk about Walmart all the time, Target. We know what's happening to the dollar stores. They're closing by the hundreds. So let me share the story with you today out of CNBC. Target shares plunged 15% after discounter cuts forecast, posts biggest earnings miss in 2 years. The article says on Wednesday, Target missed Wall Street's expectations or quarterly earnings and revenue expectations and posted only a slight uptick in customer traffic despite the discounter's price cuts on thousands of items and its early holiday sale. The big box retailer reversed course and cut its full year profit guidance just 3 months after hiking the forecast. Okay, so 3 months ago, they're out saying, hey, everything is great, consumer's strong. That's all now reversed. It said it expects full year adjusted earnings per share to range from $8.30 to $8.90. That's lower than the $9 to $9.70 per share range that it estimated in August, and below the $9.55 a share expected by analysts according to Street Account. Target now expects fourth quarter comparable sales to be approximately flat. It says that metric, which is also known as same-store sales, includes sales on its website and stores open at least 13 months. Target fell short of Wall Street's earnings per share estimate by 20%, its biggest miss in 2 years, and it marked its first revenue miss since August of 2023. On the call with reporters, CEO Brian Cornell said lingering softness in discretionary categories and costs associated with rushing shipments and preparing for the short-lived port strike in October hurt the company's quarterly performance. Obviously, a very likely excuse. Blame it on the port strike that lasted, all of about 48 hours, 72 hours, something like that. The key takeaway there is, listen to his words, the lingering softness in discretionary categories. What that should mean to you and I, what it does mean is the consumers are broke. They're tapped out. Okay, they can't afford to shop at Walmart anymore. Chief Operating Officer Michael Fidelk says disappointing that a deceleration in discretionary demand combined with some cost pressures have caused us to take our guidance back down after raising it last quarter. But he added, of course, Target feels confident in its long-term outlook. Well, its shareholders didn't feel confident today because they dumped the stock. It says Target, which is known for its cheap chick spin on clothing, home goods, and other discretionary merchandise. Since when is clothing and home goods discretionary? It says has struggled to attract steady foot traffic and higher sales. Shoppers have been selective about spending after cumulative years of pricier food, housing, and more. To woo price-sensitive consumers, Target announced in May that it would cut prices on about 5,000 frequently purchased items, including diapers, bread, and milk. It announced another wave of price reductions in October on more than 2,000 items during the holiday season, including cold medicine, toys, and ice cream. Target said it will have lowered prices on more than 10,000 items this year by the end of the holiday season. It says, they cut the price on 10,000 items. Bread, diapers, cold medicine, those are not discretionary items. Yet, they still are losing money. They still are now having to guide lower and saying that they're missing on earnings, even after making those efforts, okay? So it's not like they're lowering the prices on, let's say, the higher end things, truly discretionary items that would try to entice, the foot traffic. They're lowering prices on necessities, and they still cannot generate revenue. Target offered those discounts after hearing from shoppers about the importance of value and affordability. Says Chief Commercial Officer Rick Gomez said he added the price cuts on frequency items, leaves more room in customers' budgets to splurge on products they want, whether it's a new outfit or a beauty item. Well, evidently that whole strategy backfired, right? Because they're not spending at all. Those price reductions, it says, weren't enough to lift Target's performance in the fiscal third quarter. Customer traffic, listen to this, across Target stores and website increased 2.4% year over year. Digital sales, it says, were a bright spot, growing 10.8% year over year because of double-digit gains with curbside pickup and almost 20% increases with same-day home deliveries. Comparable store sales, however, declined 1.9% year over year. Customers gravitated toward food and everyday essentials during the quarter, along with beauty items. Well, because they had to. They're forced to. People have to get diapers for their infants. They have to get cold medicine for their sick family members. They have to be able to buy food items. So Gomez said the retailer is contending with savvy and selective shoppers who aren't willing to buy until the price is right, and the consumers have become increasingly resourceful and strategic on how they shop, he said. They know deals are out there, they're willing to search for them, and they'll wait for the exact right moment to head into our stores or to log on to our app. So look, if Target cannot generate profits, meaning show positive revenues, this does not bode well for the rest of the overall economy, at least for the middle class, the lower class, the working class, right? I'll leave it there today. Went a little bit long. I know I was on a bit of a rant, but it's a little bit frustrating to see how these things get spun. I'm even, I think, just more agitated and frustrated and a little, frankly, worried about this escalation between the Russian conflict, Russian-Ukrainian, U.S., now the U.K. Conflict. And I'm watching it closely. Hope all of you are as well. Going to leave here to get my workout in about an hour. Again, I would urge that each and every one of you do the best that you can to work on your physical fitness, work on your diet and what you eat, and just try to get as healthy and prepared as you possibly can. Appreciate your attention today, a little longer than normal. Have a great rest of your day. Please be alert. Please be prepared. Do what you have to do, okay? Talk to you all soon. Bye.